Hello, finance enthusiasts and investment wizards. Welcome back to the Investing Iguana, your go-to channel for the latest and greatest in the investment world. I'm Iggy, and today, we've got a sizzling topic that's heating up the financial circuits in Southeast Asia. Get ready to dive into the high-stakes world of banking acquisitions. We're talking about a game-changer in the financial landscape. OCBC, one of Singapore's financial powerhouses, has made a bold move by acquiring Commonwealth Bank of Australia's Indonesian unit for a whopping $142 million. But why Indonesia? And why now? This isn't just any ordinary business deal. It's a strategic chess move in the complex world of Southeast Asian banking. OCBC isn't just expanding its empire, it's making a calculated play into one of the region's most vibrant economies. But here's the million-dollar question: will this bold venture be a masterstroke for OCBC, propelling them to new heights, or could it be a risky gamble in an unpredictable market? And let's not forget about you, the investors. How will this major move affect OCBC's stock price? Is this an opportunity knocking at your door, or a cautionary tale in the making? Stay tuned as we peel back the layers of this intriguing development. We'll dive into the strategic reasons behind this acquisition and its potential impact on OCBC's future and, more importantly, on your investment decisions. So, grab your notebooks, and let's unravel the mystery behind OCBC's latest power play. Don't forget to hit like, share, and subscribe to the Investing Iguana for more insightful analyses on the moves that shape our financial world. Let's get the insights rolling. In a strategic move that is stirring the financial waters of Southeast Asia, Singapore's banking titan, Overseas Chinese Banking Corporation, OCBC, has struck a landmark deal to acquire the Indonesian unit of Commonwealth Bank of Australia for an impressive 220 million Australian dollars, about $142 million. This acquisition marks a significant expansion for OCBC, the region's second-largest lender by assets, and a key player in Singapore's bustling financial scene. The deal sees OCBC snapping up a 99% stake in PT Bank Commonwealth, a jewel in the crown of the Australian banking giant. This move is particularly noteworthy as it represents the first major acquisition under the stewardship of Helen Wong, OCBC's trailblazing group CEO. Wong, who notably made it to Forbes' Asia's Power Businesswomen list in 2021, is the first woman to lead this Singapore-based financial institution. Under Wong's visionary leadership, OCBC has been adeptly positioning itself to exploit the burgeoning business synergies between China and Southeast Asia. The acquisition of PT Bank Commonwealth aligns perfectly with this strategy, as Prawati Sujatja, President-Director of OCBC Indonesia, highlighted. The goal is to bolster OCBC Indonesia's prowess in offering comprehensive financial solutions to both consumer and SME segments. PT Bank Commonwealth is no small catch. With over 1.2 million customers and total assets worth 1.8 billion Australian dollars as of June, its focus areas include retail, SMEs, wealth management, and automotive financing. These are sectors where OCBC can leverage to expand its product and service offerings in Indonesia. Speaking of presence in Indonesia, OCBC Indonesia stands as the fourth largest private sector bank in terms of assets, boasting a hefty 247 trillion rupiah, about $16 billion, in assets as of the end of September. Its loan disbursement has seen a robust 10% year-on-year increase, reaching 144.7 trillion rupiah. As OCBC gears up to acquire the remaining 1% stake in PT Bank Commonwealth from other shareholders, subject to regulatory approvals, the Singaporean banking landscape watches with keen interest. This acquisition, expected to close in the second or third quarter of next year, signals OCBC's bold strides in fortifying its position in Southeast Asia and beyond. So why did OCBC invest in Commonwealth Bank of Australia, and what is their strategy? There are four key possible reasons based on my analysis. 1. Expansion into the Indonesian market. Indonesia, with its burgeoning economy and large population, presents a fertile ground for banking services, especially in the retail and SME sectors. OCBC's acquisition of Commonwealth Bank of Australia's Indonesian unit is a strategic move to tap into this lucrative market. This acquisition is not just about expanding OCBC's geographical footprint, it's about tapping into a market with immense potential for growth in consumer banking and business financing. Indonesia's digital banking landscape is also evolving rapidly, with a substantial increase in mobile and internet banking. This aligns well with OCBC's strengths in digital banking solutions, allowing them to offer innovative and convenient banking services to a tech-savvy Indonesian population. Furthermore, Indonesia's economic policies have been increasingly favorable towards foreign investment, making it an opportune time for OCBC to establish a stronger presence in the country. The move is likely to enable OCBC to leverage local insights and operational efficiencies, while also diversifying its revenue streams and reducing its dependence on the more mature Singaporean market. 2. Diversification of services and customer base. Commonwealth Bank of Australia's CBA Indonesian unit boasts a significant presence across several key banking sectors, providing OCBC with a golden opportunity to diversify and enrich its service portfolio. This unit has established a robust position in the Indonesian market, particularly in retail banking, which caters to individual customers with services like personal loans, savings accounts, and credit facilities. This sector is vital as it taps into the everyday financial needs of a large segment of the population, offering a steady revenue stream and opportunities for cross-selling other financial products. In the realm of small and medium-sized enterprises, SMEs, the unit has carved a niche for itself by offering specialized services that cater to the unique needs of this sector. SMEs are the lifeblood of Indonesia's economy, and by providing tailored financial solutions like business loans, trade financing, and cash management services, OCBC can significantly bolster its presence in this crucial market segment. Wealth management is another area where CBA's Indonesian unit excels. This sector caters to the more affluent segment of the market, offering investment advice, portfolio management, and other financial planning services. By integrating these services into its portfolio, OCBC can tap into the growing wealth in Indonesia, where there is an increasing demand for sophisticated financial advisory and wealth management services. 3. Strategic positioning in Southeast Asia. OCBC's acquisition of the Commonwealth Bank of Australia's Indonesian unit is a move that resonates deeply with the bank's overarching strategy to consolidate and expand its influence across Southeast Asia. This strategic decision is more than just a single acquisition, it's a well-thought-out maneuver that fits seamlessly into OCBC's larger vision of becoming a dominant banking force in the region. By establishing a more robust presence in Indonesia, OCBC is effectively complementing its already strong foothold in key markets like Singapore, Malaysia, and China. Indonesia, as a market, offers a unique blend of opportunities that are distinct yet complementary to those in OCBC's existing markets. For instance, while Singapore is a hub of international finance with a highly developed banking sector, Indonesia offers vast untapped potential in retail and SME banking, driven by a growing middle class and a large, yet still largely underserved, population. The integration of the Indonesian unit into OCBC's network enables the bank to create a more diversified portfolio of operations, spreading risk and opening up new avenues for revenue. This diversification is crucial, especially in a time where economic volatility is prevalent in global markets. A well-spread geographic presence allows OCBC to not only mitigate risks associated with reliance on a single market but also to leverage cross-border insights and opportunities. 4. Leveraging synergies. The acquisition of an established player like Commonwealth Bank of Australia's Indonesian unit by OCBC brings a wealth of opportunities, particularly in the realm of operational and cost synergies. This strategic move allows OCBC to capitalize on a range of efficiencies and growth opportunities that could significantly enhance its competitive edge in the region. One of the primary advantages of this acquisition is the ability to integrate technology platforms. In today's digital-first banking environment, the merging of technology infrastructures can lead to more seamless and efficient banking processes. This integration could range from shared online banking systems to unified mobile banking apps, enabling OCBC to offer a more cohesive and user-friendly digital experience to customers across different markets. By consolidating these technology platforms, OCBC can also achieve significant cost savings in IT development and maintenance, while also accelerating the adoption of innovative fintech solutions. Streamlining operations is another critical aspect of leveraging synergies. By bringing Commonwealth Bank of Australia's Indonesian operations under its umbrella, OCBC can consolidate back-end processes such as compliance, risk management, and administrative functions. This consolidation not only reduces operational costs, but also ensures a more unified approach to governance and risk management across different markets. Furthermore, OCBC can utilize best practices from both banks to optimize processes, enhance efficiency, and deliver better service to customers. Then how will this impact OCBC's stock price? Short-term volatility. In the short term, following its acquisition of Commonwealth Bank of Australia's Indonesian unit, OCBC's stock may be subject to heightened volatility. This is a common market response to major corporate acquisitions, primarily due to several factors that impact investor perception and the financial stability of the acquiring company. Firstly, acquisitions typically involve significant upfront costs. These can be substantial in the case of a high-profile purchase like that of a major banking unit. Such expenses usually go towards the purchase price, legal fees, transaction costs, and other related expenditures. These immediate financial outlays can affect the company's cash reserves or result in additional borrowing, leading investors to be cautious about the company's short-term financial health. Furthermore, these upfront costs can impact the company's balance sheet. If OCBC finances the acquisition through debt, it raises its leverage, potentially increasing financial risk. Higher leverage can lead to concerns about the company's ability to service its debt, especially in a fluctuating interest rate environment. This concern can be particularly pronounced in the banking sector, where financial stability and risk management are key to investor confidence. Another significant factor contributing to potential short-term volatility is the challenge of integrating the new acquisition. Integrating a large business unit like a bank involves harmonizing systems, cultures, customer bases, and operational practices. The complexity of this process can lead to uncertainty about the smooth execution of the integration, which in turn may affect investor confidence. If investors are concerned that the integration process could be protracted or problematic, this could reflect negatively on the stock price. Long-term growth prospects. If OCBC successfully lizes on this acquisition to fuel its regional expansion and diversify its service offerings, it stands to unlock a series of beneficial outcomes, particularly in terms of revenue generation. This strategic move could open new avenues for OCBC, enabling the bank to tap into previously unexplored or underexploited segments of the Indonesian market, which is known for its robust economic growth and vast untapped potential. One key area of potential growth is the integration of OCBC's advanced banking technology and expertise and product development with the existing infrastructure of Commonwealth Bank of Australia's Indonesian unit. By offering a broader range of innovative financial products and services tailored to meet the specific needs of Indonesian consumers and businesses, OCBC can significantly increase its market share in the region. This can range from digital banking solutions, which are increasingly popular among Indonesia's tech-savvy population, to more sophisticated financial products for SMEs and larger corporations. Furthermore, the successful integration of these banking entities can lead to operational efficiencies, such as cost savings due to streamlined processes, optimized resource allocation, and enhanced cross-border transaction capabilities. These improvements not only boost profitability but also enhance the customer experience, thereby potentially increasing customer loyalty and attracting new clients. From an investor's perspective, these developments are highly encouraging. Increased revenue streams from a diversified and growing market like Indonesia signal strong future performance and stability, key factors that investors look for. This growth potential, combined with effective risk management and successful market penetration strategies, could significantly bolster investor confidence in OCBC. As investor confidence grows, this sentiment typically gets reflected in the stock market, often leading to an appreciation in stock value. Investors, seeing the tangible results of OCBC's strategic expansion and diversification, may view the bank's stocks as a more attractive investment, considering the potential for higher returns and long-term growth. This demand can drive up the stock price, offering a positive return to shareholders. Market perception and sentiment. The stock market is a complex and multifaceted entity, responsive not only to hard financial data but also significantly influenced by investor sentiment. This sentiment is shaped by perceptions, expectations, and confidence in a company's future prospects. In the case of OCBC's acquisition of Commonwealth Bank of Australia's Indonesian unit, how this move is integrated and how it performs could have a profound impact on investor confidence and, consequently, OCBC's stock market performance. Successful integration of the acquisition is key. This means effectively merging the operations, cultures, and strategies of OCBC with its new Indonesian entity. Successfully doing so can demonstrate OCBC's capability in managing cross-border acquisitions and operating in diverse markets, which can be a strong signal to investors about the bank's management acumen and strategic competency. Efficient integration that leads to cost synergies, expanded customer base, and enhanced service offerings can result in improved financial performance, which is likely to be well received by the market. Performance indicators from the Indonesian unit post-acquisition will also be critical. Investors will be watching for signs of growth in key areas such as customer base expansion, loan and deposit growth, and profitability improvements. Positive trends in these areas can serve as proof points that the acquisition is yielding the anticipated benefits. This can enhance investor confidence in OCBC's strategic direction, suggesting that the bank is on the right path to long-term growth and profitability. Risk factors. Investors will be vigilantly monitoring how OCBC handles the integration of Commonwealth Bank of Australia's Indonesian unit into its fold. This process is fraught with various risks and challenges, particularly in aligning different corporate cultures, systems, and operational practices. The success of this integration will hinge on OCBC's ability to seamlessly merge these entities without disrupting the ongoing operations and services that are critical to retaining customer trust and loyalty. The regulatory landscape in Indonesia poses its own set of challenges. The country has a unique regulatory environment that is distinct from Singapore's, and navigating this will require adept management and a deep understanding of local laws and financial regulations. OCBC will need to ensure compliance with Indonesian banking regulations, which may differ significantly from those in Singapore or Australia. This includes adhering to capital requirements, reporting standards, and consumer protection laws, among others. Economic conditions in Indonesia also add another layer of complexity. The country's economy, while growing, can be susceptible to volatility and external shocks. OCBC will need to be strategic in managing its exposure to these economic fluctuations. This includes understanding the local market dynamics, consumer behavior, and competitive landscape, which are essential for making informed decisions about product offerings, pricing strategies, and expansion plans. Effective management of these integration risks and regulatory and economic challenges is crucial for OCBC. If executed well, it can lead to improved operational efficiency, cost savings, and enhanced competitiveness in the Indonesian market. This, in turn, can have a positive impact on OCBC's stock performance as investors gain confidence in the bank's ability to execute its strategic vision and generate sustainable growth. On the flip side, any missteps in this integration process could lead to operational disruptions, regulatory penalties, or reputational damage. Such outcomes could erode investor confidence and negatively impact OCBC's stock price. Investors will be looking for signs of a well-planned and executed integration strategy, along with clear communication from OCBC's management on how they are addressing these challenges. In conclusion, OCBC's move to acquire Commonwealth Bank of Australia's Indonesian unit appears to be a strategic endeavor to bolster its presence in the Southeast Asian market, diversify its services, and tap into a growing economic region. While the short-term impact on OCBC stock might be mixed due to the inherent risks and costs associated with such acquisitions, the long-term outlook could be favorable if the integration is successful and the strategic benefits are fully realized. As always, for savvy investors, keeping a close eye on the unfolding developments and OCBC's performance post-acquisition will be key to understanding its impact on the stock's value.